Welcome to a new update, and today we're going to look at Bitcoin. We're going to look at the recent price action in this macro update. We're going to look at what you should be looking at for identifying reversals. We're looking at cases where you can also start identifying the end of a cycle. And when it comes to cycles, we are discussing the current phase in altcoins and where they are heading to from here, the current valuations, and why it's important to look at Bitcoin at 30k, Ethereum against Bitcoin, and also where Chainlink is currently valued at, and why we could be seeing some strength in altcoins in the coming period. That is all in this update, but before we continue, make sure to hit the like button, subscribe to this YouTube channel, and also make sure to join our public Discord where you can find additional information on trade IDs, on the markets, you can ask me everything, etc. Let's head towards the information that we want to discuss on the markets. So when we are looking at data points, you want to know who has been behind the actual sell-off of the recent correction of Bitcoin. You want to know the thesis of whether we are going to continue dropping south, or you want to have a thesis where you can argument whether the continuation of the market is there. That's what we're going to discuss in this update, and we're going to look at a few interesting metrics that traders and investors are looking at when it comes to the market. So the first chart I've got here is a chart that is including all the data from long-term holders and short-term holders. So in this chart you've got the orange line, which is the amount of long-term holders holding Bitcoin. So this has been increasing, it has been dropping over time, and we're going to discuss shortly why this data is important. The black line here, that is the line from Bitcoin's price action over the recent years. And this is a chart from Kelly Callum, so I'm using that for the update. But when we're looking at the price action here for Bitcoin, we can see that in 2018 we've had the bear market, right? We've had a bear market in 2020, or at least a correction. We've had a swift bear market here in 2021, and we've got a very heavy one here in 2022. Which means that what the data says is that if it runs up, if the orange line goes up, long-term holders, which are holding for 1 year or longer, have been accumulating their positions. In 2018, we have been seeing an accumulation of this entire phase. So we've seen that they have been building their stack while the price of Bitcoin has been correcting. In 2020, we've seen the exact same. However, in 2021, while we were seeing this acceleration, a sharp drop-off took place while the bull market started to happen, right? And since then, in the bear market in 2022, we have seen an accumulation for the long-term holders, and including that, we see that in the recent correction of the markets, long-term holders have been getting massively into Bitcoin, which is fueling a case that you want to accumulate your position as well. It's not telling that the bottom is in, but it's telling you that we are getting into a phase where long-term holders are interested. And as you know, the long-term holders are usually the whales, and those are the ones that you should be focused on. The second chart shows the long-term strong hands net position change. So it's exactly the same as the previous chart, but then it's represented in whether they are buying, which is green, and whether they are selling, which is red. So in this case, we've got more data points. We've got the entire cycle of 2017, we've got the entire bear market of 2018, and the entire bull market as we've got here, and we've got the entire bear market of 2022. So the red numbers, or the red colors, are sellings. So they have been selling a large amount of Bitcoin in the entire bull cycle of 2017. They started to buy massively in 2018 again, which is accumulation for yourself. And as again, price has been dropping south and even dropped more. So it's not telling you whether we are bottoming out at all. It's just giving you additional information that you're on the right path when it comes to the markets. And when the long-term holders start to sell their position, it is time to start looking for a case of selling your positions accordingly as well. In this case, we've had the big sell-off in 2021, and in 2021 and 2022, we have been seeing accumulation, even in the period around 50 to 18k when the FTX collapse took place. Long-term holders were accumulating their positions. Now, in this recent correction, we can see the exact same, which is a huge spike in accumulation, which once again says that they are strongly believing in a bullish cycle or bullish continuation for the markets for Bitcoin. Who has been selling? If you want to look at who has been selling, you have to look at on-chain once again. And this chart here shows you the miners, and that's all of them, as we can see here, the reserves that miners have, and miners need to sell their Bitcoin to sustain their business. So once they start to sell, they get additional sell pressure on the markets, and that could fuel the markets in their downwards fall a little bit more. In this case, we see a sharp sell-off from the amount of holdings for the miners or the miner reserve. The purple line is the miner reserve, the black line is the price of Bitcoin. And the price of Bitcoin was consolidating around 30k, and then you can see that the price of Bitcoin has been falling towards 27.5. And as a result, we can also see that miners have been selling their Bitcoins. Actually, they have been selling around 6,000 Bitcoin in the past week, which additionally resulted into Bitcoin falling from above 30k towards 27k, and this sell-off has caused a potential sell of around 172 million additionally on the markets. So probably the start of this sell-off has caused a chain reaction in liquidations, as we have seen, hence why prices have been falling south. If you want to look at the markets and you want to understand when it's a good moment to start buying or when it's a good moment to start selling, you want to look at something that is called the funding rate. The funding rate is a data point that traders need to pay if they are holding a position in futures. Usually when the funding rate is extremely positive, and that is a green number over here, you can see it, the positive number shows that people are actually longing the markets more. When it's negative, it is mostly futures leading, and it is shorts that are currently having the positions. And when it's extremely negative, extremely red, it can show you that the markets are most likely going to break out upwards, reverse, or continue to rally. When it's the markets are trending south and the funding rate remains positive, extremely positive, it is usually a sign that the markets are going to continue falling down as people are still buying the dip, which is additional fuel for the markets to continue rolling. Because as you understand, if you long or buy an asset, if you are underwater and you need to close, you need to short the actual market. So that's why it keeps on rolling over. So that's how it works. Why I show you this is the following. If you look at the recent cycle for markets, we can see that the funding rate has become extremely negative here. As we can see in the chart, the funding rate has been dropping around the FTX collapse, which marked a potential bottom for the markets. As since then we've started to rally upwards. The second case we've seen this was during the period of Silicon Valley and the other banks falling apart, through which there was a tremendous amount of fear in the markets, and there was also a large amount of people shorting the markets, expecting Bitcoin to hit 12 to 13k again. And as a result, we have seen that the markets have been rallying back up, and since then funding rate has remained positive. So on the higher time frames you can see this, but also if you're looking at the lower time frames, you can start identifying cases where the markets are most likely going to reverse. In this entire correction, we have seen that the funding rate has remained relatively positive, right? The funding rates continue to be very positive, and as a result, the market started to consolidate and drop south. If you're looking at lower time frames, you can see that over here, it's not updated, the funding rate starts to become negative or at least lower, which means that there are more shorts in the markets, hence why we are getting this bounce back up. But are we actually going to continue to rally for Bitcoin? That is, if you want to look for reversals, you have to look at the funding rate. If you want to understand who have been selling or when you need to scale out of the markets, you can look at the on-chain analysis and the long-term holders and short-term holders. But when we're looking at the markets, you always are looking at price action, and you're not trying to get into a discussion with yourself whether macroeconomics are fine, whether inflation is going to drop off, etc. The essential part is that trading and investing is there to make it simple for yourself. So you need to reduce the amount of noise that you hear and just focus on the data points. And I think funding rate is one of them. and also long-term holder supply, and seeing who has been accumulating gives you an ingredient of what is going to come next. Now, when we're looking at the markets, I've got a chart here for Bitcoin. So Bitcoin here is currently on the weekly candles. So one of these candles is a weekly time frame, closes at UTC time at Sunday evening. Above here you can see the RSI. It's an indicator that I try to use to identify reversals. And then we can see on the bottom the volume and the time scale, and on the right we can see the price levels for Bitcoin. What do we see even more here? You can identify support and resistance level based on previous touch points. So if the markets has been reacting to a certain level, you can identify that there are buyers stepping in when it becomes support, and there are sellers stepping in when it becomes resistance. Usually it's a range of area where you can look at, but that is quite firmly how you start identifying a chart. And what you do is that you're looking at the weekly time frame first, because actually the monthly, but it gives you top-down analysis. Now we are looking at the weekly chart, and the weekly chart is the most essential one to look at when it comes to Bitcoin. What can we see? Bitcoin has seen a correction around 31k because prices have been reacting massively in this range. We can see the dip that we had in the summer of 2022. We had 2021. We also had a dip here in the beginning of 2021. We dipped in there in 2022, and then we rejected at the same area of interest, and then it became resistance in the summer of 2022. So based out of that conclusion, we can argument that it becomes resistance, and that's why we can use that level or mark it as a resistance point that the markets need to break through in order to have continuation taking place and in order to continue moving with the markets overall. On the other hand, if Bitcoin is able to break through this level, what are the next potential resistance points? You're then again looking at markers from the markets in history where we can expect us to find ourselves into resistance. Here we've had multiple resistance points. Another resistance point becomes support. Another support, and here it becomes resistance again. So this entire area is a resistance point that we should be looking at. Additionally, you can also find one here at 47k. So this is the crucial next area that Bitcoin might find itself in if it breaks to 30k. What you should also understand is that the markets have been going downwards for almost a year. So the trend has been going downwards, and through that, the trend itself says that the people that are trading the markets expect the markets to continue moving like that until we are way higher. If you ask someone here, what are the markets going to do? Most will say it go up. That is how you can identify proper moments to start selling and start buying, by looking at the long-term holders, because you have to be different than the mass. But what you will be seeing on social media is that even though we have been seeing this rally here, people are still expecting that we continue to fall. However, Bitcoin has seen a valuation that is the lowest since ever, if you look at the on-chain analysis and the real price or realized price for Bitcoin, which indicates that we are currently actually showing an upwards trend, which is similar to 2019. So trend has been downwards, but trend has been going upwards since this bottoming procedure here. Why is that? Just like we have been doing the resistance points, we can also look at the potential support zones. So here we've got a support zone as we've got a all-time high resistance point. I can actually mark it and make it green. The resistance of the previous all-time high. Oh, that's the wrong one. Resistance, support. We have been moving beneath, and then we become support again. So that is the first marker. The trend becomes higher, low, higher, low. Then what's the second important part is that we found ourselves into resistance at 25k here. So we've had a support bounce, becoming resistance, and here it becomes resistance again. And if you want to argument that we're going to continue having a bull cycle, or at least have a trend upwards, you want to break through it after a higher low, which is identified, through which we are making a higher high. And as long as Bitcoin stays above 25.4, there is a likely case of continuation taking place on the trend, and then we can see expectations of Bitcoin to 41 to 47k, unless Bitcoin is going to have a breakdown beneath 25k, which as a result is going to bring the prices back down towards 20k again, or 19k, right? So that's what we're looking at when we look at the Bitcoin price action here. And then when we're looking at the higher time frames, this is the conclusion. So then if you have this conclusion, you have got all the levels here, you're going to look at the lower time frames, which is, we're going to look at the case here of the levels that are important to watch based on the daily time frame. You can identify the exact same things. Here we've got a level on the daily time frame that becomes support, range low, or we would say support, support, and again support. Now we're getting into a stage where it becomes interesting. We are getting into a resistance point in this entire area, which Bitcoin clearly needs to break through if it wants something. In that case, if it breaks through this level here, and if we are going to break through this area here, it can argument that we continue the upwards rally. If we reject at this level, you could say, okay, if we come back towards support, it's a sign of weakness, and then we start to fall through. But still, if 25 becomes support, the trend remains to be upwards, and there is no argument to be made that we're going to have a continuation of the bear market. As a matter of fact, it is very likely that the bear market has already ended. So that's how you start looking at a market and a trend. You start identifying on the higher time frames, and then you start identifying on the lower time frames. So the top-down analysis, and based on that fact, you can assume that the markets are trending up instead of trending down. Secondly, how are you looking at the altcoins at this point? We need to identify that through Ethereum against Bitcoin. Ethereum against Bitcoin is currently just consolidating. All right. So what is the important trigger for Ethereum against Bitcoin? It's hype-driven events. With Ethereum against Bitcoin, we've seen that we've had a merge taking place. Where Ethereum went from proof of work to proof of stake, several phases. Beacon chain first in 2020. Then we went towards the merge in September 2022. And then we went into the Shanghai upgrade a few weeks ago. Leading to the event of the merge, we've seen a rally as there was hype. After that, we've seen a downwards trend taking place, through which people were ultimately fearing the Shanghai upgrade, while actually the Shanghai upgrade finalizing that is a bullish perspective for the market. So we've seen the markets dropping down. Markets have bottomed out around the area of Ethereum finding the Shanghai upgrade or finalizing the Shanghai upgrade, and since then we have been consolidating and actually going up. So looking at that case, if Ethereum starts to break this crucial level, which we have been identifying as an important indicator as we've just been going into supports and resistances, this level is the crucial one to break. As we see buys, resistance, and we can continue. If that breaks, the trend continues to go upwards. And once we have got that confirmation, altcoins will just follow suit. If you want to look at altcoins in itself, you're going to look at the Bitcoin dominance. It's just the inverse of Ethereum against Bitcoin. Doesn't tell you that much at this point, but it's just the inverse, and it shows you what how strong altcoins are, how strong Bitcoin is, etc. Now, when we're looking at other altcoins as a final chapter for this update, we can see that most of them are currently at range lows or at support levels. In this update, we have been going through top-down analysis, which means that we have been going into a case where you identify support levels based on the higher time frames, and then you start zooming in towards the daily time frames. What can we see here on Chainlink, for instance? Chainlink is an oracle. It's being used in in the ecosystem, the DeFi ecosystem, and it's built on Ethereum. It's currently getting swapped, but it's one of the largest oracles out there. Resistance point here, support there, support here again, most likely support here again. So that is the level that you're going to work with. If something has been rallying all the way towards here and comes back down to these support levels, it is an area where you are going to look at for potential points of interest, because accumulation is the case where you're looking at, right? Now, when we're looking at the resistance points, we can argument the exact same. We have to do it like this. Here we can say resistance, resistance, support, 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 resistance, and this entire area resistance, and against resistance here. So based on the weekly time frame, and I'm using multiple levels because it's a range, you're clearly looking at an area where this becomes your support level and the upper part becomes your resistance. Once we break through this upper part, it is going to trigger your continuation, which means that if you look at the altcoins against Bitcoin, altcoins are showing weakness, but they are into levels of interest overall as they are getting towards the lows. Ethereum against Bitcoin needs to show strength, because if Ethereum against Bitcoin starts to show strength, altcoins will follow suit. But what do altcoins actually need at this point? That is the next question. So with altcoins, they start to move out of confidence, and there are cycles within the markets. First of all, if the markets start to correct, it's Bitcoin first, and then altcoins start to follow suit, and they are usually a multiplier of the price action of Bitcoin. If Bitcoin starts to move up, they usually are not following through, as people are not believing that the actual rally of Bitcoin is something that is sustainable. But once Bitcoin gets higher and higher, the confidence starts to increase, then Ethereum starts to follow, then other large altcoins like Litecoin or Atom or Solana or Matic, those layer ones start to follow suit too, and then the smaller ones will start to follow. So it's just a cycle. In this case, we've just seen Bitcoin rallying up. We've seen fear all around Ethereum because of the Shanghai upgrade taking place, through which people expected that the Shanghai upgrade would be giving some sell pressure on the markets overall. But in the end, it actually ended up by being positive. And we also see that larger altcoins against Bitcoin, the valuation is Link/Bitcoin, which means that Chainlink is valued in Bitcoin, is on a very low number at this point. So the valuation of Chainlink is super low compared to Bitcoin. So there's still some gap to be made over there, because altcoins usually move more than Bitcoin and they have a higher ROI, but they also imply with a higher risk. Given the fact that altcoins are still so low in valuation against Bitcoin and against Ethereum, there is a thesis to be made that they could be pacing up from here. If we conclude that long-term holders are currently accumulating positions, if we conclude that on a weekly time frame we have been reversing trend and we are trending up instead of down, as long as we stay above 25k, what would actually be a reason for altcoins to start getting the momentum in? To have that, you need to see Bitcoin breaking through crucial levels. In that way, you need to see Bitcoin breaking through, I have to get the right chart, you have to see Bitcoin breaking through this resistance point of 30k. That is the 6k of 2019. If Bitcoin breaks through 30k, you will be seeing a very strong move on altcoins, because people get the confidence back in. And the further you get into the cycle, for instance, if you go back in 2019, this upper period here where Bitcoin went sideways, that is when altcoins start to shoot up, because that is the argument, or that is the thesis where altcoins are really performing well. And through that, you are looking at Bitcoin breaking above 30k. You're looking at a case that Ether needs to start bouncing up against the Bitcoin value. So that's going to follow through at a later point. And then you're also looking at altcoins that they are currently at range low levels or at support levels, which they haven't been in for the past few years. So the valuation of the asset is super low compared to Bitcoin, which means that if Bitcoin breaks to 30k, that we can get the confidence back into the altcoins as well. If you're looking at Link against Ethereum, we can have the exact same view here. Oh, I've got the wrong chart. My apologies for this. Chainlink against Ethereum, and actually every altcoin against Ethereum, is super low valued at this point, but they all make a retest of the level that they have been retesting in May of 2022, which indicates that right now the markets are doing pretty well, which means they give you tremendous opportunities overall. In the end, the markets are not correcting, or they have been seeing a very normal correction, but they are not bearish unless 25k breaks and then the trend starts to swap bearish again. We are seeing the valuation of altcoins are super low. So my projection for the coming period is that Bitcoin is continuing the upwards momentum. Unless 25k breaks south, then you can close your positions and we can retest 20k and low, but that needs to be coming from an outlier or a super bad macroeconomic environment, which I do not expect for this period to take place. But this is a tool for you to start identifying investment opportunities on altcoins, to understand the cycles of altcoins, what you should be looking at when you want to start selling or buying cryptocurrencies, and what you should be looking at in terms of reversals as well. I hope you have been enjoying this update. I'll be back on Saturday when we are going to do the altcoin update. Make sure to subscribe to this YouTube channel and I'll see you again soon. Ciao.